Hello and welcome to the January 2021 edition of our US Executive Podcast. I'm Greg Daco, Chief US Economist at Oxford Economics, and I'm joined today by Kathy Bostjancic, Chief US Financial Economist.
Hey, Greg. Happy to join you, and a busy day on the data front. And of note, we got the fourth quarter, or the last quarter of 2020 GDP reading. What's some of the takeaways that we should keep in mind as we're now in 2021?
Well, I think first and foremost, we were right on the spot in terms of the estimate. But more importantly, the year ended on a fairly soft note. We had GDP growing at 4% annualized, which is essentially just 1% on a simple rate basis. And I think what's more important is that the momentum going into 2021 was relatively soft. We had a recovery that was slowing. That's confirmed by high frequency indicators. And in the GDP data, we saw that we're still 2.5% below pre-COVID levels of activity, despite the fact that we've essentially recovered 3/4 of the losses from the COVID crisis. So an encouraging sign in that we were still growing in terms of economic activity, but still some concerns about the fact that the momentum is slowing. And I think that's something that was reflected yesterday in the FOMC statement, right?
That's right. What the statement overall was as expected. It was really minimal changes, but what we had was an update to the current situation or economic outlook, and it weakened since the last meeting in mid-December. Obviously, the COVID cases picking up, really restraining economic activity. They also removed, it was somewhat interesting, I guess, they removed a comment about medium-term impact for the pandemic, saying that really the pandemic and the virus having an impact on the outlook in general, but more so in the near term. But beyond that, rather quiet. And notably, but not surprisingly, there was no mention about forthcoming stimulus. And we know that potentially, along with the vaccines, could be a big game changer for the outlook. What are we thinking in terms of the next round of fiscal stimulus from the Biden administration?
Yeah, I mean that's going to be key in determining the outlook. We know the health situation is still quite concerning, and we know that mobility slowed, employment actually reversed course in December, and we had that slowing momentum as fiscal aid dwindled. But now we're looking at, on the back of the COVID relief bill, $900 billion that was passed at the end of last year, we're looking at a potential $1.9 trillion fiscal stimulus package, the American Rescue Plan that Biden has put forward. We think overall there's probably going to be about 1.3 trillion that is passed via reconciliation by the Senate. That's the process that requires only 50 votes in the Senate. And that will largely be focused around fiscal transfers to households, including higher and longer unemployment benefits, checks to families, and a slew of other measures that are meant to address social benefits and the health situation. So that should provide a fairly significant boost to the economy. I would expect that we revise our GDP growth forecast for this year to around 5.5% from 4.2% last month, with growth on an annualized basis likely averaging around 9% over the spring and summer. So some record-breaking numbers there in terms of momentum, fiscally stimulated momentum, but still momentum that should carry us through the end of 2021 with quite a bit of momentum. And I think that was partially reflected in questions to Powell during his press conference yesterday, with journalists asking him the question of where do we stand in terms of the output gap, and are there risks of higher inflation becoming a constraint from a Fed's perspective, and perhaps prompting the desire to tighten by the Fed, tighten earlier than expected.
Yeah, he did field, Chairman Powell did field a lot of questions focused on that, but he really pushed back quite strongly that, again, the recovery is far from complete. We have job losses that are still, over 9 million. And we're far from a sustainable 2% inflation rate. In fact, the Fed would like it to even be above 2% for some period of time. So really, Powell emphasized that they're still going to maintain a very patient and a very dovish monetary policy stance at this point. And it's not growth. I mean, I think it's really important. It's not growth they're targeting. as their dual mandate. It's full employment and inflation that's sustainable at 2%. And interestingly, those are both two lagging indicators. So that only emphasizes even more that the Fed is going to be dovish and patient in raising rates, whether it's raising rates or quantitative, reversing the quantitative easing or the tapering. From our vantage point, given the numbers that you laid out, Greg, we think the Fed could start to tighten, but a little bit earlier than we had previously, but still 2023. So, and the QE
still 2 years from today.
2 years from today,
or more than 2 years.
Yeah, and right, because it's probably in the middle of 2023, and then QE tapering starts, maybe in the second quarter of 2022, somewhere around there, and it's going to be very gradual. And I should add that, hopefully there is not a temper or taper tantrum, not a temper tantrum, taper tantrum in the bond market. But if it is, that the Fed could actually pause their tapering for some period of time if they needed to. So these things, they're going to be quite fluid and dovish. But I think what he also emphasized in the press conference was that the outlook of the economy is very dependent on the path of the virus and also now the progress of disseminating these vaccines. In that light, what are we looking at? What's part of our base case assumption?
Well, I think that's something that we've highlighted on a number of occasions, that a sustainable and strong economic recovery comes first and foremost via sustainable and strong health recovery. And that will come via greater diffusion of vaccines. So far, we're on a fairly steady pace. We're seeing vaccination rates around 1.2, 1.3 million doses being diffused a day, which is an encouraging pace. It's slightly faster than Biden's agenda in terms of doses over the first 100 days. But it's in line with our baseline forecast, which would see about 30% of the population being vaccinated by the end of March, and about 2/3 of the population being vaccinated by early summer, which would be close to that threshold of herd immunity, which is key in reducing the impact of the virus, reducing the fear factor, and allowing people to spend more freely on services. So that's really going to be the key challenge for the administration. The first challenge is going to be addressing this health situation. If it does, and if at the same time it passes additional fiscal stimulus, we'll be on a good trajectory in terms of additional economic momentum. And that will allow, I think, to Powell's pleasure, allow the Fed to take a bit of a back seat and not necessarily be in the eye of the cycle when it comes to guiding policy overall. So certainly a lot to watch for in the coming weeks, in the coming months. But with that, thank you very much, Kathy. And we'll speak again at next month's podcast.
Thank you, Greg.